Recently listed NTPC Green Energy share fall as much as 5% after shareholders' lock-in period ends, freeing up about 18.3 crore shares for trading.
BPCL emerges as the lowest bidder for a solar PV power project worth over 756 crores from NTPC. The stock is up over 1%.
And large trade seen in recently listed MobiKwik, 1.4% equity worth of 66.5 crore rupees changes hands at about 635 rupees per share. The stock is up over 7%.
Seagull India is buzzing in trade after its arm signs a concession agreement with the NHAI for 981 crores. The stock is up nearly 4%.
Panacea Bio is up 5% after it gets a letter of award from UNICEF for the supply of 150 million doses of polio vaccines worth 127 crore rupees.
Good morning, you're watching Chartbusters here on CNBC-TV18. I'm Hormas Patakia, with me is Vinny Motiwala, and it's the final expiry of 2024, and it does not look good for the market so far. After that initial spurt, we are off the highs of the day and almost giving up all the gains.
Yeah, not much of an excitement coming in there, but I think volatility is what one could expect, right, given that it's expiry. Plus, it's interesting to see how mid and small cap continue to see that underperformance. Not much of an excitement coming in, especially during this week for the mid and small cap.
Indeed, and that 200 DMA on the Nifty proving to be a headache yet again for the index. 23,850 was the high that we made again in today's session. 23,869 on Tuesday, 867 on Monday, and it still continues to be that resistance point for the index. And the Nifty as well. What is pulling the Nifty down though is ICICI Bank, TCS, Asian Paints. Not a substantial drop, but that is what is pulling the index down, because there are no significant gainers on the upside as well, because there's Bharti Airtel, there is Maruti, and there are some modest gains seen in stocks like M&M and SBI. But what are the sectoral indices that are doing well though? There is some bit of buying that is being seen in some of these auto names. But if you can look at the others, the PSU banks are seeing some bit of buying, but the realty stocks are seeing some bit of profit booking as we speak. But what is lined up then for the Nifty ahead on this final expiry of 2024? We have Sachitanand Uttekar of Trade Bulls who's joining in. Sachitanand, good morning. Thank you for joining in. You know how important is this 200 DMA, right? We have been talking about this all through the week, this 23,850 zone. But we are making higher lows, if you can see that, if I am reading it correctly. What's the call on the index now, and what are your stock recommendations as well for the morning?
Good morning, Hormuz. Clearly, I think the market is in a consolidative mode, and until unless we don't see the Nifty, displaying a confident close above at least its 5-day exponential moving average resistance, we may see it lingering within this particular range of 23,850 on the higher side. And on the lower side, it has some signs of support at 23,650. So I think even today's trading session should pan up within this particular range itself. The most critical point would be the 23,630 level. I think in case if that particular level is breached, then probably we may see some bit of expansion, probably on the lower side. But the probability looks low. We may see a very consolidative lackluster movement within this particular range of 23,650 to 23,850. When we look at stocks, it's better to keep a long short equations. Market is in a volatile mode. On the short side, definitely there is weakness within the real estate space, and there we are seeing that after a good consolidation again, stock like Godrej Properties is showing signs of weakness. So what we have recommended is a short call in Godrej Properties, keeping a stop loss somewhere close to around 28.92 on a closing basis. We may see Godrej Properties again swinging back towards its 200-day exponential average support for a target of around 27.60. Fresh shorts can be added in January series. On the long side, ITC, in fact, has been displaying a lot of confidence. Recently, we saw it forming a base somewhere close to around 470, 465 zone. And since then, there is a good, strong higher top, higher bottom sequence at least unfolding on its 30-minute scale. There's a positive crossover on its 5 and 20 exponential moving averages, which is again a good sign of strength, and the relative strength is also improving. So probably we may see the stock unfolding its strength we may see a swing towards 490, 505 kind of a range within a few weeks. And that's why we are recommending, accumulating ITC even on declines. One should keep a stop loss at around 470 from a trading perspective when you are building long positions in January futures. The immediate target could be around 490, but eventually we see it swinging back to 505.
Okay, Sachit, thank you so much for joining in with us this morning, talking to us about the markets as well as some of these individual stocks in focus as well that one should be looking out for in the new series. Thanks for that. But let's shift focus to our special segment where we will get you for a few ideas for profit from Money Control Pro. Jitendra Gupta of moneycontrol.com joins in to give us and talk to us about the stock that he's tracking closely.
Bharat Electronics has corrected recently and I think it should get re-rated. The company is on a strong growth trajectory supported by strong orders in hand and visibility. It secured close to 35,200 crore orders in 24. The company added close to 7,200 crore new orders in the first half of current fiscal, indicating there is a strong order momentum. The company's order book now is around 75,000, 74,000 crore, which is close to 4 times its annual revenue, and that provides a very good visibility. It is expected to win orders to the tune of 25,000 to 40,000 crore over the next 2-3 months, and of course it is aiming to deliver 18% revenue growth over the next 2 years, and that will be supported by its current order book. Besides, increasing contribution from non-defense, exports and services segment is expected to drive margins and its growth. It will support its growth. BEL is investing close to 6 to 7% of its money on R&D and diversifying. It is trying to diversify into areas like cyber security, unmanned system and AI, which is expected to again support long-term growth. On the valuation front, I think stock is trading at 30 times FY27 estimated earning, which is reasonable, and more so in light of earnings visibility supported by strong orders and of course improving execution over the next few months.
Well, time for a short break on Chartbusters, then more on the markets and specific stocks on the other side. Stay tuned.
Welcome back. You're watching Chartbusters on CNBC-TV18. Let's move on and pull up the stock of EPAC Durable because that's in focus today after the company has clarified on reports of Chinese company plan to buy the stake in the company. Upasna is here to give us more details on this one. Upasna.
Well, the stock remains in focus today as company clarifies to the media reports stating that the Hisense Group, which is China's top TV company, plans to acquire 26% stake in company's subsidiary. Now, the company has clarified that the business discussions are currently in the preliminary stages and further said that it will file a requisite disclosure in compliance with the applicable laws as and when required. Now, let us look at a company that is Hisense Group. Now, Hisense was founded in 1969, a global leader in home appliances and consumer electronics operating across 160 countries. Now, this MNC has a global revenue of $29 billion in 2023 and 40% of the sales comes from the international sales. Now, this company is known for technologies like laser TV, ULED, AI chips, and company's portfolio includes renowned brands like Toshiba TV and ASCO. So all in all, this stock certainly remains in focus on the reports of acquisition by Hisense Group.
Absolutely, 5% uptick there for EPAC Durables. Let's move on, talk about Gland Pharma. Now, in the morning, we saw Gland Pharma saw a bit of a dip, then recovered from the day's lowest point. Why? Because now Sensex, which is the arm of the company, has received 10 observations, but this is from the French agency and French authority, that is ANSM. This is for Sensex manufacturing facility where the inspection was carried out by this French authority between December 9th to 19th. Nature of these observations is not something that is known, but Sensex is committed to working closely with the ANSM, that's the French agency, to address these observations. My only thing and concern comes in is to mainly watch out for in terms of the outlook that comes in for Sensex, because in Q2, management of Gland Pharma said that Sensex, they expect that to break even EBITDA break-even by Q4 FY25 and FY26. They were expecting EBITDA positive moves coming in here. So is that still going to be continuing? Would that be some bit of an impact? We'll have to wait out for commentary from the management. And what would be the long-term opportunity impact that they've spoken about before? Is there any impact coming in on the European side, given that, we have these restrictions or observations coming in from other French agency? So, Urmas, those are the main key highlights. But as of now, like you're seeing, the stock is also moved to the green territory. So, not much of a concern, given that it's not the US FDA, it's just the French agency. A slight bit of an impact, maybe, is what we're watching.
Well, observations are observations.
Yeah, well.
But the stock has indeed seen a significant recovery from the lows of the day. Around about 1740 was the day's low. We are almost close to 1800 now on Gland Pharma, but it's been an underperformer this year. It's down almost 6% on a year-to-date basis so far. But as we slip into a short break, let's also dive into Growth Code, an initiative by Grow and CNBC-TV18, which offers valuable insights and strategies to help you make well-informed decisions on your investments. Now, this week, CNBC-TV18's Nigel D'Souza interviewed professional trader Manu Bhatia to discuss the recommended minimum capital requirement for beginner traders.
What is the recommended minimum capital amount for beginners with regard to trading?
For equities, the capital amount, I think someone can begin with a capital of 2 lakhs to 4 lakhs, depending on whether they're doing a intraday strategy or a positional strategy on the equities. For someone trading in derivatives, I would say for derivatives intraday, a minimum of 5 to 7 lakhs. And if you're doing positional in the derivatives, having a capital of 10 lakhs is something that should be good from a beginner's point of view. More than the capital, you need to also have the right knowledge in place before you trade something.
Welcome back. Expiry-related volatility at play because the Nifty has now turned into the red as we speak. 23,700 is where the index is now at, significantly below the 20-day moving, the 200-day moving average. That is at 23,850. So quite a distance now off the highs of the day. But there are plenty of stocks in the broader markets, though, that are doing well. Sagility is one of them. That is in a 5% upper circuit yet again. It is the 8th straight day of gains for the stock. And if you could see, in the last 1 month, the stock is up 63% as we speak. So great gains there for Sagility. Some positive brokerage notes also came in from JP Morgan and Jefferies. So Sagility is one. Intellect Design is the other one. That stock is up almost 10% in today's trading session as well, continuing to move on from the gains that it has seen recently, and over the last 1 month too, that stock has risen almost 40% as Intellect Design Arena now above the mark of 1,000. And lastly, the other one I wanted to speak of was KFin Technologies. That stock is up another 6% today, and its year-to-date gains, if you talk about it, have now gone up to 220%. So the stock has more than tripled in this year so far. So great going for some of these broader market names. And the other broader market name that has done well, a recent listing, that is Swiggy, and that is because the stock is now up over 50% from its IPO price of 390. And my colleague Rachna spoke to Swiggy's food and delivery business CEO Rohit Kapoor, and he spoke about the rising competition in the 10-minute delivery business and its impact on the upcoming quarter. And he also spoke about the new initiatives on women empowerment, where they have had their women delivery partners sign up with NSE and SEBI for financial literacy and planning. Take a listen.
Actually, I think that's where I think clarity is important. If you look at Bolt is not only just delivering from a brand, right? It is delivering from your favorite brand. So 3 things about Bolt. One is all your favorite brands are roughly on it, mostly, right? So you'll find Starbucks, you'll find McDonald's, you find every brand. So it is not like you have to choose from only a particular place. Second is, it is the same menu. So it is the same menu which used to get on, for example, if you're ordering Aloo Tikki burger on McDonald's, it's the same Aloo Tikki burger which used to get in 30-40 minutes earlier. You're getting in 10 minutes. It's because I think we have densified store locations, etc., and we are delivering to a shorter radius. Very exciting. I think we are seeing very good trends on Bolt. And we do believe
highlight and how it would contribute to the top line for the next quarter.
No, I think forward-looking statements can't be getting into that, but already touching 7.5%, 8% it crossed 5%. I think now it's touching about 7% of platform orders. But more interestingly, I think we're the pioneers in quick commerce. I think we are definitely the pioneers in quick food delivery, and we'll be doing more and more. So watch out for this space. Yeah.
Lastly, speaking of Switch 3 Brigade, if you could take us through this initiative, that we saw some MOUs being signed, and you highlighted performance of 15 outperformers when it came to food delivery. Tell us about the initiative.
Yeah. So I think it's very important for us to highlight role models to everyone, and these are our top 15 women partners. One of the women partners has delivered 7,000 orders, and each story, I think, more than numbers, each story is so special because there are partners who have, during COVID, the family businesses shut down, they came into Swiggy, supported the business. There are partners who have educated their children through, one of the partners' daughter has become a doctor, son is studying engineering. So it's a story of true India where, people work hard, they make a difference. I think there's huge commitment they have to their families and their prosperity. So this initiative in particular, which was also the Honorable Chief Guest was Srimati Amruta Fadnavis ji and NSE officials, all of us are here. I think the core is that once you start earning money and there's a small bit of money and everybody has some money to save at somewhere, how do you invest wisely? And there's a great initiative that we launched with NSE to educate our women delivery partners on the importance A of earning money. I think it's very important to have financial independence, and B, once you earn that money and you're a little bit to save it well so that the money grows and you can do what you want with it, maybe buy a house, buy a car, educate your children. So I think it's a very, very strong program. We also committed to ensuring that by 2030 at least we have 100,000 women delivery partners on the network. Truly 50% of India, which is women, need to be far more bought into the employment. And I truly believe that flexible employment, where, if there's a working, there's a mother who wants to work and her preferred time is when the kids is in school, she should be able to do that. And I think our slot system, the kind of technology we have, SOS button, multiple other things allow them to do that. And I'm seeing more traction and more of them coming in, joining the platform. It's a trend which will only grow.
So 1 lakh women delivery partners by 2030, that's the goal.
Yes.
Thank you so much, Rohit, for sharing your vision. Thank you
so much.
Okay, and with that, it's a wrap on this edition of Chartbusters on CNBC TV18. Thank you so much for tuning in. Up next, your Trading Hour.